Hello everyone, you're watching the weekly Forex Outlook by Light Forex. From this video, you will find out the outlook for the major currency pairs. As usual, we start with having a look at the chart of the US dollar index. And here we can see that American currency continued its correction to the downside last week. The movement wasn't very big, and so far we can see that the USD is able to stay above the previous resistance line and now support line, which connects the highs of 2016 and 2018. All in all, the main topic at the market is trade war between the United States and China. On Friday, America launched the increase of tariffs on $200 billion of Chinese goods, and Chinese authorities said that they will retaliate, although we do not know the details yet. The market, of course, is feeling the negative pressure, especially the assets which are sensitive to the changes in markets sentiment. We can see that Chinese yuan has weakened a lot, and the currency pair USD versus the yuan may continue increasing. We have the levels of 6.91 as the nearest target. This is 78.6% Fibonacci retracement of the decline of 2018. And the next levels to watch will be levels around 6.97. There will be more news related to the trade talks between the United States and China. Probably the authorities will make some statements, Donald Trump for sure. There will be a meeting of G20, and Trump will meet Chinese President Xi Jinping, although that will happen not really soon, only at the end of June. And until then, the market may stay in the situation of uncertainty that will continue hurting the risk assets. Let's have a look at the economic calendar at lightforex.com to see which important events lie ahead this week, so that we could prepare for trading. We can say that there will be a lot of events scheduled. It's possible to pay attention to Westpac Consumer Sentiment Index, which will be released in Australia on Tuesday. Also on Tuesday, Britain will release employment data, average earnings, and climate account change. For now, the market is, of course, still worried about Brexit, that there is no solution and no agreement within British policymakers. On Friday, Britain released stronger than expected GDP figures for the first quarter, and we can see that British economy is doing fine despite various concerns that exit from the European Union will hurt it. So far, everything is fine. However, traders pay greater attention to political events than the economic events, and the importance of these data releases will be smaller than usual. Germany will release economic sentiment index on Tuesday, and here we can see that the forecast is that the index will show some improvement. There will be also Chinese data, industrial production, fixed asset investment on Wednesday. German GDP and Euro area's GDP for the first 3 months of the year is also awaited on Wednesday. America will release core retail sales figure, and the forecast here is to the downside. On Friday, American CPI data disappointed the market, and that put the USD under pressure versus major currencies. Of course, the US dollar still has a lot of advantages and still remain strong, as we have seen on the chart on the US dollar index. But the recent data are worrying investors, and at least the USD doesn't have this bullish momentum to go up straight away. Canada will release core CPI data, an important inflation indicator. And also on Thursday, which is the 16th of May, there will be some employment data from Australia, another key indicator, and we will see drivers for Australian dollar. European Union Euro area will release trade balance figure, and in the United States look for building permits and Philadelphia Fed Manufacturing Index and other important indicators for the US economy. Finally, on Friday, pay attention to the inflation data from the European area that will have an impact on the euro. And that is all. We can see that no central banks meetings, some data releases from the United States, Europe and Britain and Australia as well are the main things we can see in the economic calendar. Let's switch back to the charts to see what changed during the recent days and what is here to come. As we can see from the weekly chart, a euro dollar managed to stay above 1.12 level by the end of the week. The euro didn't move much to the upside as it was stopped by resistance in the form of 50-day moving average around 1.1250. But still, the fact that the currency pair formed a lower high several days ago managed to support it and allow it to stay rather stable. As long as we remain above 1.12, the currency pair will retain the chance to test 100-day moving average in the area of 1.1315 and also this resistance line around 1.1340. All in all, this surely will be an area for selling of the euro, but if we get above 1.1250, some small long positions targeting the moving average will be possible, and then there will be sense to look for the opportunities to enter the market with short positions, as such things happened to the euro many times before, and we can all remember them. The British pound was under negative pressure. We can see that by the end of the week, the currency pair fixed below the 100-day moving average in the area of 1.3022. It is now hovering above 1.30 level, the key psychological level. Moving averages on the daily chart are horizontal, and it means that the currency lacks momentum for the movement to the upside and for the movement to the downside as well. We can expect consolidative dynamics with probably the bearish bias. The support is located around 1.2960 ahead of 1.2890, while the resistance will be at 1.3085 ahead of levels from the previous high located in the area of 1.3175. Dollar yen tested lower levels last week before it found support around 109.50. We got below the key level of 110, and it is obvious that the currency pair switched to the lower levels, and it will be rather hard for the USD to return above 110.65 and 111 marks. However, we do not think that the strong decline of the USD is possible given the fact that all in all American currency enjoys rather decent data. But if retail sales disappoint as CPI did, Then the decline below 109.50 will open the way down to 108.55 mark. That will be the area where we will take profit on selling dollar-yen pair. The attempts to recover will meet resistance around 110.65, and we may see another decline to 109.50. Versus the Canadian dollar, we can see that consolidation in this pair remains around the central level of 1.3450. The currency pair needs to overcome resistance at 1.3510 to be able to get to 1.36. The uptrend here continues, but the bullish momentum is not strong, and the lack of really positive data from the United States, some positive surprises, means that the pair will consolidate below 1.3510 for the longer period of time. Support is located around 1.3380 level. Australian dollar traded around 0.70 level. The trade tensions between the United States and China are hurting the pair, and we can see that current price action is below the level. We are targeting areas around 0.69 and 0.6830. Although the Reserve Bank of Australia didn't cut interest rates at its meeting, still there is the lack of positive information for the currency, and at the 4-hour chart we can see moving averages are in the very bearish formation here. So a break below the support level around 0.6960 will open the way for further downside, and to improve the situation somehow the return above 0.70 is necessary. In this case, if the pair manages to do that, we'll target levels around 0.7060. New Zealand dollar suffered a bit more here. The price action was more volatile as the Reserve Bank of New Zealand cut interest rates. The market players then bought back the currency, but we can see that it all in all stayed below the level of 0.66. Market players are now trying to forecast whether the Reserve Bank of New Zealand will continue cutting interest rates further this year. In the upcoming months, no rate cut are expected, and as a result, we can expect the exchange rate to stabilize. The support is located around 0.6540, resistance is at 0.6635, ahead of 0.67. The fact that the United States and China didn't manage to find an agreement in the trade situation obviously will limit the upside for this currency pair. Gold managed to rise and approach the 50-day moving average around 1291. There is the negative intersection of the 50-day moving average and 100-day MA, and we can see that gold approached resistance line, so it's natural that we will turn to the downside from this area. Bearish momentum is not great, so for selling we need to have some conservative targets around 1275.50 and a bunch of recent lows around 1266.25. Finally, oil remains under some pressure. It managed to find support of the daily moving averages around 69.68 here. There is the positive intersection of the moving averages, so the decline below this level is needed to open the way down to 68.30, but all in all it doesn't look like we'll see a major fall in oil prices, only a moderate one. However, resistance at 72.55 is still limiting the upside and will likely continue doing so for the upcoming trading days. This is all. Thank you for your attention and trade with Flight Forex.